Good morning, traders. It's the 4th of April. We are Signal Centre talking ball. I'm Joe, joined by Steve. Good morning, Steve.
Good morning.
How you doing?
Very well, thank you.
Good.
Went to see Priscilla yesterday.
Oh, nice.
An
Any
evening
good?
with Priscilla. Yeah, it was all right. Just
Yeah?
talked about herself and Elvis a lot.
Right. Where was that?
That was at the London Palladium in
Oh,
Old
okay.
Street. Yeah, so yeah, it
Ah.
was pretty cool. Forgot all about it. Just
Yeah.
yeah.
I was going to say, you didn't mention it yesterday.
No, I completely forgot about it. But
It's a
yeah, it
late
was
night.
nice. It was a late night, yeah, but it was quite quick getting home from there and getting the.
Okay.
It was only took us an hour door to door. It's like not bad.
Oh, that's good.
Yeah. So
Happy
yeah, all
days.
good, all good.
Cool.
I was out celebrating my cunt ahead trade ideas.
Yeah, I'm not surprised. You're on fire at the minute. We'll get to that in a bit, but let's do the headlines first up then. So the US manufacturing remains in recession. The US ISM manufacturing index declined to 46.3 for March from 47.7 previously, which was below expectations of 47.5, and the fifth successive reading in contraction territory below the 50 level. As far as inflation is concerned, there was a fresh decline in the prices index to 49.2 to 51.3 from the previous month. We've seen some hawkish Fed rhetoric. The St. Louis Fed President Bullard stated that the market is focusing too much on banking strains and expects inflation to be sticky, especially with a strong labour market. He also stated that higher oil prices would make inflation fighting more difficult and reiterated that interest rates need to be increased to above 5%. But US yields declined on the back of this. Treasuries posted strong gains after the US manufacturing data, with the 10-year yield retreating to near 3.4% and close to March lows. Swiss inflation declined yesterday. The consumer prices increased 0.2% for March compared with expectations of 0.4%, and the year-on-year rate declined to more than expected to 2.9% from 3.4%, below consensus forecast of 3.2%. And overnight, we had the Reserve Bank of Australia. There were some that were saying that rates were going to be hiked, but they actually kept rates on hold at 3.6%. This was generally in line with consensus forecast, although there was a minority that had expected a further increase to 3.85%. The RBA stated that policy acts with a lag and the full effect of rate hikes is yet to be felt. It added that some further tightening may be needed, but the bank is on hold for now with a less hawkish forward guidance. So let's take a look at some charts. Let's kick off with cryptocurrencies and have a look at how they've been moving over the past 24 hours.
Sure, let me take a look. Let me get my chart up, share my screen. Here we go. Right, crypto, what are you doing to us, crypto? It's still hanging about this resistance, so it's getting a bit smelly up here. We're going to have a break one way or the other. At the moment, we're stalling at this resistance. Price action, as you can see, this is a daily chart, so you can see since the 19th of March, and what are we now, the 4th of April, we have been banging our heads against this quite decent resistance. We knew it would be decent. You look at the price action between the 10th of May and the 10th of June in 2022. We hung around this level for about a month. So maybe we've got a little bit more to do, a little bit more work, definitely on the upside, and before we see whether we can project further. For me, it's the key support level, 26,541. That's the neckline. That would, if we manage to get below there, close below there, especially on a daily basis, that would form a double top formation. Double top formations are pretty decent, pretty rare, and pretty reliable overall. So the measured move target for something like that, let's take a look, would be a move to 23,700, which doesn't seem like a long way away, but it is. It's about 5,000 points, nothing to be sniffed at. So yeah, that's what we're looking at the moment, 23,700. That would be the measured move target if we form that double top. Price action in Ethereum still remains elevated as well, in line with Bitcoin. Cryptocurrencies all sort of seem to be singing from the same hymn sheet. Again, we've got this potential for a double top formation. The neckline is around about 1687 on Ethereum. We've got that 1730, which has always been a pretty pivotal level in between. So yeah, we can see again, this last couple of weeks has just been banging our head against the resistance here. It's 1843 up to the high we've got is 1860 on Ethereum. XRP Ripple had a bit of a down dip yesterday, got down to 48.24 cents. Seems like we've given up the gains on here. This explosive rally we had from the break of the downward trending resistance line continued in sort of two waves. So nice correction higher. We have managed to stall currently in front of that 60 cent level, and price action over the last 7 days has been overall negative. A little bit of a pullback this morning, trading just above the 50 cent level. That's enough on cryptos. Let's take a look at commodities. The one I like to trade and I like to watch is gold, trading in this symmetrical triangle formation. We can redraw the formation and get a potential trend line below here, or we can take it back to there and say we've connected on a number of points here. So we're still in that triangle formation. The top of that formation comes in at 1990 today. So a nice bullish outside candle from yesterday. We've got a 9-bar moving average there on the daily chart that we're sitting above 20, the 55. Sorry, the 55, the 100, and the 200 moving averages all below, so we're above there. So we are trading in a bullish trend also, and this triangle formation could potentially be a bullish pennant, which would have a measured move target way up above the all-time highs. So all-time highs sitting above at 2075, and where the bulls are pushing hard on this, and really sort of like that dollar index taking a little bit of a hit this morning, trading at the 102 level. So maybe we've got a little bit more on the upside on this bad boy. Certainly feels like it. And crude oil, taking a look at crude oil, we managed to maintain the gap that we formed over the weekend. Price action broke away from that 75.68 high from Friday's price action, and we opened up. The low we saw yesterday on WTI, 78.98, that's significant. If we manage to hold above there today, then we should maintain this bullish impetus, really sort of charging towards that 200-day moving average that comes in at 83.55 today, but really nicely above the other moving averages. So breaking through that trend, we've got a previous swing high that comes in at 80.95, that's the 7th of March, and also from the 13th of Feb, 80.72. So really sort of like looks like it's deciding whether it can maintain this. At the moment, yesterday's candle looks a bit like a hanging man, so we should really be careful. If we do manage to get a break today, that would be like almost like a vacuum trade. That'll be a really fast move back down to fill that gap, I expect. Brent crude oil, same sort of price action, and we are actually pushing above yesterday's high. We've been above it today, so that looks a slightly more positive overall. It's trading at a $4.40 premium to WTI crude oil. That's definitely come in the last few months. But same sort of price action. If we can maintain prices above yesterday's low, that is 83.40, then further upside should be seen. And natural gas, it's hanging about these lows, these significant lows, the 210 level. We've been down a little bit lower than that more recently, 207.80, and just sitting above, but overall bearish. There's no real sign of this price action or the trend changing. We remain locked in this downtrend. Could have it easily have a pullback, plenty of room or plenty of scope for a pullback, but I think it'll be selling to those rallies at the moment. So that's about it. Let's take a look at the FX, then dive into the indices afterwards if anyone's interested.
Yeah, sure. We may need to come back to cryptocurrencies because there's been a request on Doge, which I don't know if you want to have a quick look at that, Steve, while
Hey,
we're...
Joe.
Huh?
Sounds dodgy to me.
Yeah, it is dodgy, very dodgy. Right, let's take a look at FX first, and then Steve can come back to that in a moment. So dollar index yesterday, big reversal on the dollar. We can see that we posted a bearish outside candle yesterday. So we made highs on the session, but then closed below the lows of the previous session, engulfing all of the previous day's gains. We actually filled that gap yesterday that we spoke about. We did that quite early on in the session because we mentioned it on the stream. That was at 102.83. So we did have a little bit of a shoot above that, closed back below it, filled that gap nicely, and again looks as though we may have actually gapped lower today as well. So looking pretty bearish overall. There is some previous support, this previous swing low that we posted on the 23rd of March, that may do a job as support as it previously has done, and that looks like it's going to maybe get tested at some point today. If that fails to hold, then we're starting to look for the next levels of support on the downside at 101.29, all the way down to this previous swing low here from early February at 100.82. So yeah, very much looking bearish at the moment, and would expect that's having a positive impact on euro US dollar. So if we take a look here, we can see that we did get a bullish day yesterday, but it didn't engulf the previous day's losses, and we didn't get the bullish outside candle in the same way we got that on the dollar index on the reverse side. But it does look pretty positive, and again it's into these major levels of resistance here that have done a pretty good job in recent weeks. That 109.22, that's the 78.6% fib level, that blue line there, from that move to the upside in early February down to this low that we posted in mid-March. So interesting to see if we can break above that today. Of course, if we can, then the chances are we are going to go and target this previous high that we posted in early Feb at 110.33. Let's take a look at cable. That's challenging these previous highs as well. We can see on the left-hand side here, we've had a couple of touch points at 124.47. The last time we got to these levels, it did then spark a pretty chunky corrective move lower. Will we see that again today to maybe form a potential triple top? We saw a very strong day yesterday, a bullish outside candle, and a bullish engulfing candle yesterday. Very, very strong indeed, pushing higher today into this level again. Has it got the legs to continue moving higher? If we can get a breakout here, then we could see a continuation higher. Let's scroll back to the left hand side to see what sort of levels we should be looking at if we do get a breakout. I think the obvious one for me would be this previous high from the 27th of May 2022. That's up at 126.67. So looking pretty strong there. Big test underway at the moment. Let's take a look at some of the other dollar majors. Let's look at dollar yen. So this can't make its mind up, pretty choppy at the moment. It did find some support down here at 130.39, which provided a decent bounce. But yesterday we saw some weakness in the dollar index, an engulfing candle formed, and we're a bit undecided as things stand today. So I'm not really too sure where to go with that at the moment. Let's take a look at Aussie. Decent break through resistance yesterday. We've been talking about this 67.16 level highlighted here in red, which has continued to cap the upside advances on a number of occasions here. Many touch points, but eventually we've seen a breakthrough. So we've closed above that with a very strong candle yesterday, an engulfing candle. So today we'll be looking ideally for a pullback towards that newly formed support at 67.16 and see if that can hold, and then that may provide further upside opportunities. So looking pretty strong there, and again highlighting the weakness that we're seeing in the dollar index at the moment. A few requests. Let's take a look at some of these yen currencies. So euro yen first up. So we continue to trade below this downtrend resistance line, as we've spoken about now for a number of weeks. It feels like we did see an attempt at breaking through that 144.96 and 145.56, both of which failed on Friday last week. Yesterday it was pretty undecided, quite a big range on the session, but no real direction taken from that. And today we're pushing higher up by 0.35% as things stand, and attempting to try and break through that downtrend again. So from a trading perspective, obviously we've seen a number of failures at this level. Is it going to do that again? Well, if it is, then you want to be thinking about maybe taking a short entry in and around this level if you think that this level is going to continue to act as resistance, and potentially with a stop above these highs, targeting a decent kind of pullback into this range here. So from a risk reward perspective, that actually looks quite attractive at the moment, but it is trying pretty hard to break through. And obviously if it does, You don't want to be in that because it would invalidate the bearish idea pretty quickly. Let's take a look at the intradays. In fact, let's just take a look at sterling yen first, because this is slightly different in that it's actually broken through the downtrend. We saw here a number of attempts at trying to break through before eventually it did on the 29th of March, and since then prices have remained elevated ever since. We did come up just shy of a resistance here on Friday, a decent reversal, but yesterday we saw again a pretty big range, but all in all it managed to hold on to the price that it opened at, and we're pushing higher again by almost 0.4%. So we do have some resistance here to consider. Looking at the intradays on these two pairs, they look quite similar as highlighted by Mark on stream. We've seen a short-term break of trend, but at the moment prices are pretty sideways, pretty choppy, and we are attempting to break through yesterday's highs as things stand. And if we can do that, then the chances are we're going to go and target these previous highs that we posted on Friday up at 165.46. And if we take a look at Euro Yen, similar kind of situation where we've got the break of trend. This is my gun to the head trade yesterday. It was slightly on side, but we'll come back to that in a bit. Again, facing resistance above from Monday's highs at 144.94. If we break through there, the chances are we're going to go and challenge these previous highs around 145.56 to 145.67. What else have we got? Euro CAD has been requested. Let's take a quick look at that, shall we? So this is the daily chart, and as we can see here, the long-term trend still remains very positive indeed. If we go all the way back to the beginning of this uptrend move in August last year, we can see there's been a few touch points along the way, and each time we've got back to that trend line, the buyers have stepped in. So I highlighted this level, I think, last week. Drew a little circle on there to indicate that maybe this would be a good area to think about getting long. We posted a nice bullish hammer candle here despite a gap lower, and we've now filled that gap. So are we going to hold on to this trend line here and potentially push higher? Maybe, I would say. It's obviously a very big trend line, one that's been in place for a very long period of time. We've also got a 50% fib level from this shorter term swing levels here, from the swing low in February to the swing high in late March. So that looks to be holding on for now. Let's have a look and see if there's anything on the intradays that's looking of interest. So we can see here the gap that was created on Friday. We filled that gap. We haven't really broken through it yet in a convincing way. So until we do, maybe there is still a potential here that we could actually see an eventual breakdown of this long-term trend line. But if we can get a close above this kind of level around 146.61, then that could be enough of a signal to suggest that this trend line is going to hold and we can start expecting higher prices in the short term. Anything else? Euro New Zealand dollar. Okay, they're all firing in today. Let's take a look at this one on the daily. So we can see here that it's trading in a bit of a bullish channel. Prices appear to be stalling around current levels. We can see there's a few touch points in here around 174.58. We can see a very tight range actually on the daily chart here. So this is kind of being capped between 172.72 to 174.58. The latest pullback to the lower end of this range potentially could provide an opportunity to buy, targeting a move to the upper end of the range. Let's see if we can make more sense of this on the intraday charts. So we can see here this range a bit more zoomed in, something along those lines there. So may have missed the opportunity to have bought at the lower end of the range just to get the kind of best risk reward on this. Although maybe we could still squeeze out a 2-to-1 risk reward trade on that basis. To the upper end of the range, we're talking, well, 2.15R on that one. So that looks quite a nice setup, actually. Maybe a candidate for the gun to the head. So I'll bear that one in mind. Anything else on the currencies? I think that's it. I think I'll leave it there, if that's all right, guys. Yeah.
That's all you got to
Yeah.
say? Right,
Sorry,
okay.
feels like
Let's
went for
go for it.
ages. Go on then, what are you going to do for us? You going to look at Doge?
I'm going to look at, sorry about that. I'm going to look at Doge, and it doesn't look like much has happened if you look at the weekly chart, but look out, Joe. This is exploded, isn't it? Look at that. Now, we're just technical analysts. We have got no idea why that's happened because we don't really look at the fundamentals. Only we can look at the fundamentals, but really we're looking at the technicals. So let me just tell you how much we have. We saw a rally of 37%. That's not bad. Definitely worth getting out of bed for. Let's take a look at the more recent price action. So we had this spike higher in October, similar, well, not similar, but an explosive rally higher in October. Are we going to see the same sort of thing again? Back then we saw a 167% rally. So it might be just the start of it. The key to it is it's really challenged this February 4th of Feb high. That is around about the what is it, 10 cents, 10-cent level. Also, we have got another one around about 11 cents, but the main one up at 16 cents. That's the one to watch. And I'll tell you for why. So, yeah, I mean, we've broken up above the moving averages, obviously, with this explosive move higher. So short term looks pretty positive. Really needs to clear this 10-cent level and close above it on a daily basis to be more significant and more positive and more worth looking at. So looking at where I was going to go from here. Yeah, I was going to go back to the weekly chart because really we want to see where the potential is for this to go. The 16-cent level for me is one of the key levels on this chart, and that would be the one, if I was long of it, I'd be targeting a move to there, and I'll be taking profit in front of that. Because look what we've done historically: 19th of April, the low, 21st of June, 21, the low, 19th of July, 21, the low. Broke through it on the 29th of Nov, but back above it after that. So all these weeks, these are all the weekly lows. And then once we broke through that resistance and closed below it significantly, we did have a bit of a sort of spiky week over this January, start of last year. But then after that, we've never closed above it. We've attempted on 1, 2, 3 occasions, well, 4 occasions. In fact, the last time we were up here, up that level was the 30th week of the 31st of October, and that was the end of it. So, yeah, looks positive. We're at that 10-cent level, and below you've got this upward trending support line, which is significant because we have posted higher lows. So, yeah, it's definitely worth looking at. If you've got the Doge, this is a sort of interim resistance level we're trading at now. Maybe worth taking some off, looking to buy back later when it collapses. Yeah, overall, that 16-cent level for me is the key. I don't know whether that helps anyone or whether it's sort of like it gives you an idea of really from a technical perspective. That's what we're looking at. Yeah, long way off from its heady heights of 74 cents. So
Blimey.
yeah, that was so, yeah, a long way lower.
Just a 92% collapse.
Yeah, just a mere 92% collapse. So yeah, that's it. That's now we can dive into indices. If anyone's interested in indices, I'll just cover it off very quickly. It's been pretty positive this week. FTSE, especially. Last hour, what's going on? Managed to get up to 77.27 and a bit of a reversal, shooting star candle on FTSE.
Head trade.
Or maybe we've still got half an hour left though, Joe. We get sucked into that a lot, so we've got to be a bit careful. We're seeing the same price action on the DAX 40. That stalled at resistance, so I quite like this one even more so. You can see the resistance level that we had up there, 15,660. Could we be rejecting that level? The level that I'd want to watch now would be this potential double top formation. If we manage to get down below 15,553, that would signify a double top and give us a little bit of a potential for a move lower, probably around about to the next one of the next support levels, 15,472. That'd be the measure move target if that confirms. On the just looking at short-term charts, obviously on the Dow US 30, again stalling around about. We've got a lot of sideways price action built in, but obviously this is overnight price action, so not really significant. Let's take a little bit of a look at the daily chart, see what levels we have broken through. And yesterday was a pretty decent day. It broke through that resistance level formed by the swing highs from the 7th of March. and the 6th of March, Monday and Tuesday, the rejection from there. And overall, we can maybe bring some fibs into it to see this this last move lower that we got. We're through to 61.8, potentially targeting a move to 33,839, which is 78.6% fib. And again, that would be significant from these highs that were price action was capped back in February on the Friday and the Monday. So decent levels. Nasdaq has continued above that break of the resistance. That was a measured move target of the double bottom. We've taken out one of them. The more major one is up at 13,858, and also we've got resistance from the swing high at 13,720. Looking pretty positive overall. However, yesterday's candle, maybe not so much. That for me looks like a bit of a hanging man candle, so I'd be a little bit nervous, and definitely more nervous if we manage to break yesterday's low. If we take out yesterday's high, just stick with it. At the moment, that looks like to be the trend is your friend. And the S&P's broken above that channel. Let's create the bigger channel from the high of the 22nd of March, and now we've got a couple of got a couple of touch points on that, so still sitting quite nicely. It's above, remember, the weekly channel break that we had, sitting above there. Still got a few days to go. Is it going to maintain these decent levels? Targeting really resistance, the next resistance level up at that 4,175 level. Still a bit of a way to go, 50 points, but you can sort of do that in a day with S&P. Its average range is about 62 points at the moment, so no reason why we can't get up to that, test that resistance today if this bullish momentum is maintained. So that's about it. That's a wrap. Let's go into gun to head.
Yeah, okay. Right, so gun to the head trades. Steve and I picked trade ideas live on the stream as if we had a gun to our head. Steve is smashing it at the minute, but we both pick trades. We both risk 1% of trading capital, which is now on a live account. Our risk reward ratios on these ideas must be better than 2 to 1. And the trades are closed at 9 p.m. UK time, or unless the stops or the targets are reached in that time period. So quick recap on yesterday's ideas. Let me just bring up the TradingView profile so we can check those out. They're all time stamped on there, and of course we are doing it on a live account as well, so we can verify all of this. So yesterday I was selling euro yen on the break of the short-term trend, looking for a retest there and for prices to reject. If we click the play button, we can see that at 9 o'clock it was on side off of its best levels of the day, but we made 0.27R on that. And Steve's trade idea was gold. So he had a few technical issues during the stream, but we did say he'd be posting it up, and did, and he got it on. He was buying gold, and boom, straight to target. So that was a 2.25R win. Well done, Steve.
Yeah, I was quite pleased with that because I was going to give up. My sort of my browser, my Chrome was you know what happened, Joe? I had a few, when you add little things, extensions to the browser. I've deleted all them, rebooted, and it all seems to be fine at the moment. So I haven't had a problem since. So it was getting them extensions in, them chat GPT extensions. They're not good, mate.
No.
I think it's monitoring everything I do, and it's probably after my gun to head trade ideas. So yeah, got to watch out.
Okay. Yeah, have you got an idea today, Steve?
No idea,
Everyone's
mate.
hanging on your every word.
I've got no idea any day. Don't follow me.
Well,
That is probably the best idea. I don't know.
okay.
Have you got one? I know
No.
you'll have one, Joe. You haven't.
There was a couple of bits I was looking at.
I mean, yeah, for me, it's still feel bullish up, but I'd prefer to buy a dip in gold. I'm not going to lie. We are sort of approaching that 1990 resistance. Buying at 1980, there's a little bit, I'd say that buying it in the mid 60s for me is the real trade idea. Funny enough, I did the intraday trade idea for Signal Center today and was looking to buy a dip around that level. So I can't really find value in buying it here. The crude oil, that looks like for me is going to sort of carry on, kick on, continue. And so the indices is probably the only one I'm sort of like looking at thinking, oh, got a little bit maybe of an opportunity, but I think I'm going to run into some buyers just a little bit lower. So I'm a bit struggling all round, Joe. Um,
I'm happy to go and stick my neck out on these indices
Whoa.
because I'm looking at Euro Stocks 50 and just take a quick look at the daily just to size this up. Let's just get rid of these drawings. So obviously had a pretty strong move to the upside. Load of chopping here, big ranges on these candles. It seems to have slowed down a little bit and we've seen a decent-ish kind of rally over the last few days. But we are into these previous swing highs that we posted on the 6th of March. We've had a little bit of a look above it over the last couple of days, but I'm wondering whether or not the sellers are going to think, do you know what, this is a bit too high in the short term. Let's pull this back a little bit. So looking at the intradays, I know we've still got 29 minutes left on this candle, but potentially forming a bit of a reversal here on the hourly. Potential for a bearish outside candle. So I'm going to have a go at this, I think. I would like to sell it with a very, very tight stop indeed. So it's currently at 43.16 on my chart. I don't know if this is actually the Awanda price that I've got.
No, it's 40. It's a little bit higher, 43.25 at the moment. So I'll just adjust it accordingly.
All right, what's it called on Awanda?
EU 50 EUR.
What? Oh no, that's
What?
a zero. EU50 EUR. Yeah, not as good, but let's go with it anyway. So sell that with a stop loss at 43.43. My target was pretty aggressive. I was going to look for a 38.2% pullback of this entire up move, which is all the way down here at 42.04. Nearly a 7-1. Silly. It's silly, Joe.
It's silly, Joe. It's really silly. It's too late, Joe. You're in.
Okay, I'll take
There
it.
you go. You're in.
I could do with a big old humdinger paying off.
Yeah, I know, but you just smells of desperation to me, Joe. But let's,
All right, just because you're having a good time at the minute.
have we got a league table of what we've done over the last month, say?
Yeah, all right. Here we go. Let's have a quick look. So we can see I mean, our overall P&L is on the since we first started is going very, very well indeed at all new all-time highs. We can see Steve's line in orange. He's making new highs. Mine is just a steady kind of grind higher, but
Yeah,
Steve is catching me quick.
yeah.
So we can see here over the last month. So these are Steve's trades here. Let's get rid of that. Get off. So these are the R outcomes from Steve's last few trades over the last month. And the sum of that at the bottom is 12R, 12.09R. On average, he's making half an R per trade over the last
It's really weird, actually.
24 trades.
Historically, March has never been really a great month. March, April are always like pretty difficult. But I think what we're seeing, the difference is we're seeing trends, and only short-term trends, yeah. But they're sort of it seems to be behaving itself from a short-term perspective. That's all. That's all. The only difference I can see.
Well, I'm not seeing any of them. So
no, but that's the difference. We've all got a different trading style, and that's the key. Overall, it will come back. We all, it's never you can't get too confident with these things. It slaps you in the face really hard. So
it does. Yeah.
don't get too carried away with this. Now, listen, I'm going to go for natural gas, and you might be shouting at the screen, going, "What are you doing, Steve? It's mad." Which it probably is, but there is a sort of a humdinger here at natural gas. On the Oanda price is we've traded below the $2. So it's a little bit different to the prices that we look at sometimes on the screen, because there's different prices we're looking at, different brokers we're looking at. But the sort of thing I'm looking at is, listen, if we do get the break, and why would the break happen today? No real reason. So we know that from natural gas inventories that storage is like pretty full up. And I remember not so long ago, The crude oil had a similar sort of problem when storage got really full up, especially heading towards it was just after, was it after the lockdown? Can't remember, but there was no storage and prices collapsed and they went below zero, which people said would never happen, but they did, and that was it. So I'm not saying that's going to happen here, obviously, but it remains under pressure. So and if we do get a break of that $2 level in here, it's like 208 on some other charts. But if we do get a break there, there's a big open space on the downside until the next support. So I'm going to go for that. I'm going to, well, that's about 3.5, which is a bit lumpy. Let's see what we can get on in terms of trading, selling at market and getting 1%, risking 1%, 143. So I can can go for that. My stop is at 208. Targeting a move to say 1.90, something like that, 2.5 to 1. That about right. Price trading, where's the price trading? 202. Yeah, that looks all right to you, Joe, doesn't it? Sell 505. Just making sure I'm not risking too much. You know what it's like. Yeah, so I'm going to line all that up. That's what I'm going to go for. Stop at 208, getting short here on natural gas, targeting a move to 190.
Okay.
That's it.
Good luck. Okay, day ahead. Let's quickly wrap this up then. So we've got the US JOLTS job openings, which are due out at 3 o'clock today. Overnight, we've got further central bank policy, this time from the Reserve Bank of New Zealand. They've got their policy decision at 3 a.m. UK time. And then tomorrow, doesn't look like we've got much already shaping up for the Canadian jobs number on the 6th, and then the non-farm payroll number on the 7th, which is Good Friday, so we'll get to have a day off there and avoid the mad volatility from
I thought
non-farm
normally
payrolls.
they did it on the day before if it was like Good Friday.
Yeah, I thought they did too, but obviously not in this instance, according to the data we've got.
Does that mean the computers aren't very religious?
I guess so. Agnostic.
They don't need the
Agnostic
rest, do they?
computers.
Yeah. Okay.
Yeah, okay, cool. Right, let's leave it there then, Steve. I hope everybody has a great day. Thanks for watching, and we will be back tomorrow.
Cheers all.
Bye-bye.